Welcome all of you to this online workshop on how to make money in trading using the dynamic live first ever stock market intelligence of the world. Now earlier in the webinar you must have seen the different benefits as a trader you can draw from this dynamic live. And you've also understood there are some very unique intelligence in this dynamic live which are at work, which always make sure that we always get the right entries and right exit in any given market condition. But then today in this session, we will learn things in a bit more detail. We will discuss things in a bit more detail so that when you sit there to start your trading, now what are the things that you have to keep in mind? Now, how do you go about trading? Now, these are all some of the things that we will discuss. Remember, the things are very simple and very easy for you to implement. Just that you just have to understand these things today in this session and then go about implementing as it is told today. Now, once you have subscribed for this dynamic live and when you open it, this is how it is going to look. And you can see here. Now, in this dynamic live, whichever script, stock or index that you select, now there are two different charts that you can see. We are looking at Nifty now, and there are two different charts. One on your right side, we call it as the intra-week chart. The one on the left side, we call it as the intraday 3 chart. Two different charts are there. And in both these charts, there is this line. You can see this line here. This line, we call it as the long signal. We call it as the long signal. So there are three basic things that you have to understand before we start understanding the process of trading. And they are, the first thing is, this long signal has a character. It can change its color from red to green, from green to red. Whenever it turns green, it means it is telling you to buy. It says the trend is up. Whenever the long signal turns red, it means it is asking you to sell. It means the trend is down. So just by looking at the long signal, the color of long signal, you'll be able to understand whether the trend is up or down. And moreover, if you're looking at the long signal in the intra-week chart, we call it as the intra-week long signal. If you're looking at the long signal in intraday chart, we call it as intraday 3 long signal or ID3 long signal in short terms. Got it? So this is the first thing. And the second most important thing here is the zigzag cautions. You can see here, these are the zigzag cautions. If it appears at the top, it will be red in color. If it appears at the bottom, it will be green in color. Now, whenever a zigzag symbol appears, it means get ready, the price is about to reverse. So temporary price reversals are identified by these zigzag symbols. Okay, it can appear either in ID3 or in intra-week. But whenever a zigzag symbol appears, now many of you may have a question in your mind. There are so many symbols. Now, which one do we consider to be a zigzag? Now, for that, you just have to come look at this reason here. In the reason, you can see here very clearly, it will be mentioned as ID3 zigzag or intra-week zigzag. So when you see that, you know that the price can reverse. Okay. Similarly, the third and last one here is the edge points. Now, whenever the price comes down, you can see here the price was going up. The long signal was green in color. As it was going up, at some point it started coming down. As it started coming down, it came very close to the long signal, or in many cases it also touches the long signal. Okay, whenever the price touches the long signal or comes closer to the long signal, we call these points as edge points. Whenever the price reaches an edge point, we can expect a price reversal once again. Okay, now you can see here, whenever an edge point is reached, you can once again come look at the reason. As of now, the reason it is written as ID3 long signal edge. It means this is the edge point it is referring to. It means the price can reverse, and the price did reverse after the edge point, isn't it? So these are the three things that you have to understand before we get in. Now, once you have understood this, now let us move on to understand the methodology here. First thing is, it is as simple as just the 1, 2, 3 easy steps that you have learned in the webinar. Now, first step is to add your favorite stock or index by clicking on those favorites here. Now, once you've added it, your job is to come and look at this dominant method action information. Now, in the action information, there will be certain very clear instruction written there, like buy call option now, or later it will tell you hold call option, and finally it will tell you exit call option now. Or if it feels there is a clear selling opportunity, it will be written as a buy put option now, and then hold put option, and finally tells you exit put option now. So when you read it, you will understand it very clearly. You just have to do whatever is written there. But whenever you are trading in options, whenever it tells you to buy a call option or a put option, there is one more important thing that you have to do, and that is to select the right strike price. So if it tells you to buy a call option, then you can come look at this pyramid pointing upward and pick one number out of these three. That is your right strike price for call option. Similarly, if it tells you to buy a put option, then you can come look at this pyramid pointing downward. You can pick one number out of these three. That is your right strike price for put option. Got it? But out of these three, which is the right strike price that we pick? When that is the question, you have to understand when you're trading in index options or in stock options, we have monthly contracts, monthly options contract, option contracts available for us to trade. Now, these are option contracts which has 1 month validity. It expires on the last Thursday of every month. So in that case, what you can do is you can split that month into three parts. First part, you can call it as the beginning of the month. The second part, you can call it as the middle of the month. The third part, you can call it as the end of the month. So in the beginning of the month, if you get any trading action here, like buy call option or buy put option, it's better you can trade only OTM strike price in the beginning of the month. And then at the end of the month, middle of the month, if it tells you to buy a call option or a put option, you can trade ATM strike price. And at the end of the month, if it gives you a trading opportunity, you can trade ITM strike price. Now, this is one very easy way to select the right strike price out of the best that has already been selected here. Now, at the same time, when you come and trade weekly options, in weekly options, you know that these are the option contracts which has on 1 week validity. It starts on a Friday, expires the very next week, Thursday. Now, if you're trading in a weekly option, it's better you select only ITM strike price throughout the week. If you want your trading to be very simple, peaceful, without any confusion, if you want to go about trading there, it's better you trade only ITM strike price. Got it? Later over a stage, you will understand when to get into ATM or OTM, even in weekly options. So this is the important thing here. So once you have understood to select the right strike price, now it is about to, it is time for you to start trading. When it tells you to buy a call option or a put option, first thing, select your strike price and then do the trade. Once you have done the trade, wait for the action to tell you to exit call option or exit put option. That is when you can go ahead to exit the trade. Until then, just hold on to that. You don't have to do anything extraordinary there. Just stick to the trade. But there is one additional thing that you have to do, and that is to secure your profits time and again. Now, how to secure your profits? Now, that is a very easy process. Let me tell you how to do that. For that, let me also point out towards an example. Now, here is a case wherein, it said buy put option now. When it said buy put option now, that is the time you would have selected one strike price. You would have bought a put option. Now, at that point in time, I think I got into a 8,600 strike price put option. I bought it at around 30 rupees, if I'm not wrong. Now, once I bought it at 30 rupees, the price started coming down. As the price started coming down, in the intra-week chart, we started seeing some symbols. There were some symbols out there. Whenever these symbols appears, it means you're supposed to secure your profits. Now, how to secure your profits? Let us understand this. So all that I did here is once I bought the put option at around 30 rupees premium, as the price started coming down, when the symbol appeared, as we know that we are supposed to secure your profit, at that point in time when we looked at the premium was already trading somewhere close to 55 rupees. 55 rupees if I'm not wrong. So in that case, what we will do here is first we will exit the trade. We had bought at 30 rupees, we exited at 55 rupees. So we got back our investment, plus we got additional 25 points profit. Now, I went ahead and bought another put option, probably 8,400 strike price, if I'm not wrong. I bought it somewhere at around 26 rupees, right? So what is happening is, now my initial capital is back, plus I have 25 points profit. So I have reinvested part of that amount, to another put option. I still have a put option in place. I'm not, it's not like I don't have any position now. I still have a put option, but what has happened is my risk on this trade has completely reduced. It is totally nullified. In many cases, what would have happened is probably I bought it at 30 rupees. In some cases, the movement was so very big By the time I exit, I have exited somewhere at around 80 rupees. So the profits are quite big enough. So what I'll do is part of the profit I'll reinvest. Part of the profit I can reinvest, buy another put option, so that what happens is from here, even if the price reverses, the new put option, the new strike price which I have taken, the worst thing that can happen is it can become zero. Even if it becomes zero, I don't care, because I have already secured a major profit on my capital is already safe. Right now, this is how you can secure your profits time and again whenever any symbol appears. Now these symbols can be a dynamic system caution or a DMBOTS. Any symbol appears, remember these symbols appear only in the intra-week chart. Keep a track of it. Whenever it appears, you are supposed to secure your profits. Very important part as far as trading in options is concerned. As long as you do that, your capital will grow very smoothly. You will also start trading without any panic or tension. Got it? So this is how to go. You can go forward. Remember, the action tells you to buy a call option or a put option, select a strike price, get into the trade. Now once you are into the trade, wait until it tells you to exit the call option or exit put option. But in the meantime, if there is any dynamic caution, I mean any symbol appears in the intra-week chart, that means you are supposed to secure your profit. Shift your position from one strike price to another strike price. During this process, you can reinvest part of the profit, or you can reinvest part of your initial capital. So this is how you can go forward. So this is one very easy process for you to start trading when you implement it continuously, mechanically for one entire month. First thing, decide what is your capital. Based on your capital, decide, select one stock or an index. Trade the same script for one entire month. Now that is the easiest way to do trading. Now when you trade it for one entire month, when you implement this concept as it is told, mechanically for one entire month, we expect you to earn a minimum of 10 to 15% returns at least per month. You know that there are people who are ready to invest crores of money if they can get 10 to 15% returns per annum. But then here today we are talking about earning 10 to 15% returns per month. Right? So that can be achieved very effortlessly here, but then implement it mechanically. Now during this process, when you start implementing it in one entire month, you will get multiple trading opportunities. In all these trading opportunities, the results will be something like this: gain, minus, gain, minus, gain, minus. Or it may start off like minus, gain, minus, gain, something like this. But then whatever happens, just make sure that you implement it completely for one entire month. Just finish that 1 month duration. For you will eventually end up with a minimum of 10 to 15% minimum returns. There are many months where you get more returns also, like in the month of March we saw close to 50% returns or more. But just implement it for one entire month. But of course, there is one reality that we have to accept, that when people see a couple of minus trade, people tend to panic. People tend to panic. When they panic, they do all possible mistakes. They shift, they change, they try different strategies, but then end of the day, they end up wiping out the complete capital. Now in this case, the best thing to do here is follow some discipline called as money management. Now how to do money management in this case? That is a very simple process. All that you have to do is first to see what is your capital. Based on your capital, whatever is your capital, utilize only 10% of your capital. Utilize only 10% of your capital per trade. Got it? So if your capital is ₹1,00,000, then utilize only 10%. So what happens here is, so the 10% is 10,000 rupees allocation. So in a trading opportunity like this, wherein I bought a call option, put option at around 30 rupees premium. So per lot it is, how much is it? Close to, if I'm not wrong, 2,250 rupees investment per lot. So when I have a 10,000 rupees allocation, I think I can do 4 lots, isn't it? So as your capital increases, the allocation will also increase, the lots will also increase, the profits will also rise, the balance will also increase pretty fast. Got it? So this is how you can do money management when you implement this, mechanically with this discipline. Now what will happen is profits are inevitable, and you will eventually end up with a 10 to 15% minimum returns. But then over a period of time, when you start implementing it, when this becomes a habit, then you will start thinking, now is there anything more that I can do to earn more profits? When that is the thought process that comes to your mind, then you can be rest assured that this dynamic life can be used in multiple ways to earn some huge returns. All right. But then today in this session, we will discuss about 2 more different steps which can help you achieve more returns. Got it? Stage by stage we can increase, and then overall we will see how we can increase, earn more returns time and again. But any which ways, let us move on to the second step. Now in the second step, whatever we understood in the first step, the same things will be implemented in the second step. No changes are absolutely, but then only thing here is we will add one point. What is that? Whenever the action tells you to buy a call option or a put option. Now let us say at this point in time it was very clearly written as buy call option now. It said buy call option now. So when it said buy call option now, what we are supposed to do here is before we do the trade, it was written buy call option here. Before we do the trade, we check the intraday 3 long signal and we also check intra-week long signal. Got it? So whenever we check that, now if both are in same, let us say at this point in time when we check the intraday 3 long signal, it was green in color. We check intra-week long signal, that was also green in color. Let's assume in such a case what happens is both of them are green. It means both of them are telling you to buy. Both of them are telling you that the trend is up. In an uptrending market, you are planning to buy a call option, then you are trading in favor of the trend. Now that is the right way, that is the best way to trade. Go ahead, no thinking, no guessing, just do the trade. Got it? Similarly, even in this case, when it said buy put option now, we checked the intraday 3 long signal, it was red in color. We checked intra-week long signal, that was also red in color. Both of them were saying that the trend is down. In a downtrend, you're going to buy a put option, that is the right way to trade. Go ahead and do the trade. But there are cases where you find trading opportunities like this where it was written buy call option now. So when it said buy call option now, we checked intraday 3 long signal, it was red in color. We checked intra-week long signal, that was also red in color. In some cases, one is red, one is green. It doesn't matter. If there is any long signal which is against the trade that you are about to take, when it says buy call option, if there is any one long signal out of these two which is in red, it means there is a mismatch, isn't it? If there is a mismatch, before you do the trade, there is one more thing that you have to do, and that is if you're trading in Nifty, go check what is happening in Bank Nifty at the same time. Got it? So when it said buy call option here at this point in time in Nifty, at the same time what is happening in Bank Nifty, go and check it. Now this process, when you're trading in one script, going and checking some other script to decide whether to do this trade or not to do this trade, this process we call it as Tenkai signal. Checking some other script to take a decision here in your script, this process is called as Tenkai signal. Got it? T-E-N-K-I. So if you're trading in Nifty, go check Bank Nifty because Bank Nifty is your Tenkai signal. If you're trading in Bank Nifty, come and check Nifty because the Nifty is your Tenkai signal. Got it? So we will go check Bank Nifty at the same point in time here. But when we go and check, what will we check? What will we check? We will check only for two things. Only for two things. And that is when Nifty gave a buy here. When Nifty gave a buy here, it means when it said buy call option now. At the same time, is there any zigzag on top in Bank Nifty? At the same time, or is there any edge point, long signal edge point? Is the price touching any long signal, or is it very clear close to the long signal? It can either happen in ID3 or in intra-week in Bank Nifty. It doesn't matter. If any one of these two is there, either a zigzag or a edge point is there in Bank Nifty, then we will avoid this trade. We will not do this trade in Nifty. Got it? We will avoid this trade in Nifty. But when it said buy call option, we saw that there is a mismatch. Since there is a mismatch, we went and checked the Tenkai signal, that is Bank Nifty. If there is no zigzag, if there is no edge point, then we will go ahead and do the trade. We will go ahead and do the trade. So in this case, let us see what happened. Now, when was this? It was on 19th May at around 10:30 in the morning. Let us see what happened in Bank Nifty at the same time. When we check Bank Nifty at the same time, it is 19th May at around 10:30 in the morning. So you can see here in 19th May 10:30 in the morning on top, there is no zigzag, there is no edge point. Even in intra-week, there is no zigzag, there is no edge point. So if there is nothing, then we will go ahead and do the trade. But if there was an edge point or a zigzag like this, if there was a zigzag like this, any symbol like this at this top, then we wouldn't have done this trade. Or if there was any edge point like this, if the price was touching the line or close to the line at this point in time, then we would have avoided the trade. Got it? So this is how one can trade following the second step. The process is very, very simple. I'll just repeat it in short for you to make a note of it, or probably to, understand it. So let me brief it. All that you have to do is, when the action tells you to buy a call or buy a put option, before you do the trade, check ID3 long and intra-week long. If they both are in your favor, if the color of both these long signal are in your favor, then go ahead and do the trade. If it is not in your favor, even if one is not in your favor, if there is a mismatch, only if there is a mismatch, you will go check Tenkai signal. Got it? When will you check Tenkai signal? Only if there is a mismatch, you will go check Tenkai signal. What will you check what will you check in the Tenkai signal? You will check if there is a zigzag or a edge point at the same time in the Tenkai signal. Why will you check the Tenkai signal? It is because to take a decision whether to do this trade or not to do this trade. So if there is a zigzag or edge point, we will not do the trade. If there is nothing, then we will do the trade. This is all that you do in the second step. If you can do this, then what will happen is, in a month compared to the first step, in one entire month, you will see there will be many trades. You will end up avoiding those trades. But if you had done those trades, probably eventually it would have ended up being a minus trade. But anyways, you have avoided it. You have avoided some minus trade. When the number of minus trades reduces, then what will happen? The profits will increase. Your account balance will increase, and the returns at the end of the month will also increase. So if you can implement the second step mechanically for one entire month, we expect you to earn a minimum of 20 to 25% returns at least per month. Now 20 to 25% returns per month is not a small return. It is a huge, massive return, isn't it? Now that can be earned per month if you can follow this mechanically. Got it? So this is all about the second step. Now once you have understood the second step, and if you want to move ahead and try to do something more for you to earn more returns, then let us move on to the third step. But remember, these three steps, it is actually one single method, but then it has been split into three steps to make sure that it has been made easy to everyone, that whoever is using this, whichever step is very easy to you, just follow that step. Follow it completely mechanically for one entire month. Just don't keep hopping around between one stock to another stock time and again. Just don't keep hopping around between one step to another step time and again. First, implement any one concept for one entire month. If you can do that, returns is for sure in any of the steps. But then if you want to earn more returns, then you have to go for the higher step, isn't it? That is all that you have to understand here. But whichever is easy for you, follow that. Right? So let us move on to the third step. Third step is very, very easy, because if you have understood second step, then third step is absolutely easy. Let's assume the price tomorrow starts going up, and then at this point in time it says buy call option now. If it says buy call option now, before you do the trade, check ID3 long, check intra-week long. If they both are already green, it means they both are already supporting you. If they both are already supporting you, then along with these two, you're supposed to go check another third one, and that is dynamic system. Now what is dynamic system? Dynamic system is another intelligent platform like Dynamic Live, which will be installed for all of you who have subscribed free of cost for a limited period of time. Now dynamic system, as I've told you in the webinar, it is used to do some amazing positional trades in futures and options. Right? Now how to do positional trading using dynamic system? There is a very clearly defined method. We call it as a level 2 trading method. Now there is a small training video on that. You can go watch it to understand the method. Where to find it, I will show you at the end of the session. But then anyways, as per dynamic system level 2 trading method, as of now, what is the current position? Are you supposed to be holding a long position, or are you supposed to be holding a short position? This is what you have to check. And the biggest benefit is it gives you signals and information one day in advance, the dynamic system. So you can keep everything checked one day in advance, so that in live market you don't have to try, keep on checking things straight away. You can take decision in a fraction of seconds and go ahead and do the trade. Got it? Only thing that you have to do here is, now at this point in time, when it said buy put option now, then we checked ID3 long, it was red in color. We checked intra-week long, that was also red in color. We checked the dynamic system positional trading method. As per that also, we were supposed to be holding short. So all three of them are pointing downward. So no thinking, no guessing, just go ahead and do the trade. Implement the trade, as easy as it gets. But there are cases, as I was telling you, tomorrow if the price goes up, that is the next trading day, if the price goes up, if it tells you to buy a call option, remember, ID3 long is green, it is supporting you. Intra-week long is also green, it is supporting you. But if you go check dynamic system, as per dynamic system, we are still supposed to be holding a short position. So as we are holding a short position as per dynamic system, there is a mismatch, isn't it? You are planning to buy a call option, but there is a short in dynamic system. So there is a mismatch. Now, since there is a mismatch, go check the Tenkai signal. In Tenkai signal, that is in Bank Nifty on top, if you come across any zigzag or any edge point in Bank Nifty, then completely avoid this trade. Don't do this trade. Got it? Well, let us assume the price starts coming down. Coming down, at this point, it tells you buy put option now. When it says buy put option now, if ID3 long is already red in color, if intra-week long signal is also red in color, and dynamic system, as of now, it is already in short position, in such a case, you don't have to check any Tenkai signal. Simply go ahead and do the trade. Got it? So this is all that you're supposed to do in the third step. If you can follow this third step, then what will happen is, compared to the first step and second step, the number of minus trade in the third step will come down drastically. Now when the number of minus trades drastically comes down, then what will happen is the end results will also increase. There will be many months in a year, you will see that literally there will be zero minus trade as per the third step. And when you implement this, we expect you to earn a minimum of 30 to 40% returns at least per month. 30 to 40% returns at least per month can be expected very easily by implementing this third step. So this is all about the third step. But then before I close this session, let me show you one more important point. For that, I may have to open the dynamic system. So I'm opening it. But in the meantime, if anyone else has any other question, you can ask me right now. You can text your question in the chat so that I can see that and I can reply back to the question. So here is dynamic system. In this dynamic system, you can see here I have opened a Nifty chart. This is the daily chart of Nifty. These are the prices now, and along with the price there are three lines. The black line represents speed trend, green line represents mid trend, purple line represents long trend. There are three different trends. Whenever the price is trading clearly below all three lines, it means it is in a clear downtrend. Whenever it trades above all three lines, it means it is in a clear uptrend. As of now, you can see here it is in a clear downtrend. But any which ways, now there are times when the price trades between the three trends. You can see here it is trading between the three lines. Now this is a phase we call it as in between trends. We refer to this as in between trends. So whichever stock or index that you're trading, and when you're trading it on a regular basis, and if that stock or index is in an in between trend, as per the dynamic system, when you look at it, then whatever trading opportunity that you get here, if it tells you to buy a call option or a put option, for both these all the trading opportunities, you are supposed to check the Tenkai signal. You're supposed to check the Tenkai signal to decide whether to do this trade or not to do this trade. Got it? So this is all about the third step. So these are the three steps. You can follow whichever is very easy to you. And then along with it, let me also show you, there are these reference videos in the dynamic members area. Now all of you will get access to this dynamic members area once you have subscribed for Dynamic Live. Let me show you where to find it and which are the training videos so that you can go through. In the meantime, if anyone else has any other questions or doubts in these 3 steps, you can ask me now. Now this is our official website, dynamiclive.in. In this website, you can see here on top there is this members area in the menu. Just click on this members area. Once you click on this members area, what happens is this page will open, and once it opens, it will ask you for your email ID and password. Now once you have registered, you will get your passwords for members login. Once you have logged in the menu, once again you can see here there is this training 2020 in the menu. Just click on it. When you click on it, now what happens is there is this these are all the training videos available. If anyone is starting very fresh to learn dynamic system, then I would suggest you to first watch this dynamic system basic navigation video, and then after that you can scroll it down a bit. And once you scroll it down, there is this dynamic system level 2 trading method, the positional trading method that I was talking about. But before you watch the level 2, watch the level 1 trading method. So level 2 trading method will become very easy for you to understand. So these are all the 3 videos related to dynamic system. Each of this video is hardly for 20-25 minutes, and it is already there in 4 different languages to comfort you. Got it? So these are all the training videos, and then after that there are other reference videos like if anyone is a beginner to options trading, then what you can do is you can watch this video for option basics for beginners, and then after that you can scroll it down a bit further, wherein you get this video, options trading and money management for beginners. Now in this video you will learn how to select the right strike price for monthly options or weekly options, whatever it is, and then how to shift over to secure your profits, how to do money management. All these things are very clearly discussed here. And then at last you can scroll it down to till the end. Now you will find these 2 videos. Today we discussed the first step, which can help you on 10-15% return. That was method is explained very clearly in this video. Watch it. And the second and third step that we discussed today with the inclusion of the concept of Tenkai signal, that is also discussed in this video. You can go watch this. And we have seen, for if you're trading in Nifty, then Bank Nifty is your Tenkai signal. If you're trading in Bank Nifty, then Nifty is your Tenkai signal. But if you're trading in any stock, then which is your Tenkai signal? Now all these things are very clearly explained in this particular video. You can go watch it. So this is all about today's session, gentlemen. If you have any other questions or doubts, you can ask me now. All right, looks like there are no more doubts. So gentlemen, thank you all for joining today's session. Wish you all a happy trading and a very good afternoon. See you on the other side in the pre-market session on Tuesday. Until then, goodbye to all of you.